The payment space is getting crowded, but it's not stopping Apple from barreling through in an effort to become the leader in this market. The Wall Street Journal is reporting that Apple is in talks with U.S. banks over a potential person-to-person mobile payment service. So joining us now to break all of it down, you know him, he's Dan Ives, Managing Director and Senior Analyst at FBR Capital Markets, a man who covers Apple among many other companies here. So Dan, explain to us here, what's going on? Is this just another extension, perhaps, of Apple Pay? What are they looking to do here with this possible mobile person-to-person, peer-to-peer payments platform?
Yeah, this is really part of Cook's grand vision, losing the physical wallet. It's tangential to Apple Pay, but it's really Apple's opportunity now to get a bigger piece of the consumer spending, get into that e-commerce sector, and this is really one of these areas over the next few years. We believe it's a $5 billion market opportunity. They're right now laying the seeds of growth, and I think this is a smart strategic move to put their hat in the ring here.
All right, so you mentioned this whole idea of commerce and getting a bigger piece of the consumer wallet. So as this plays out, all right, does this kind of move play into this whole idea of the Apple halo effect or the ecosystem effect? Explain to us how this plays in to this whole idea that Apple is trying to get everywhere in your life right now.
Yeah, if you take a step back and you think about everything we hear with Apple, from automotive to streaming to Apple Pay, the goal is here, they've been the hardware, the gold standard on smartphone. Now it's about trying to tap further into the consumer, into that wallet, into the living room, into e-commerce, into streaming. And that's what they're really trying to do here. Today, that's 2% of revenues in terms of some of those tangential areas. We believe that goes to about 15% in the next 3 years. That's what Cook sees here. He's seeing the forest of the trees, trying to skate to where the puck's going in terms of these e-commerce areas. That's why this is a move that I think investors really like to see.
All right, so Dan, let's talk about this for a second here, because we know that details are scarce at this point. But you talk about this idea that these tangential ancillary businesses are going to grow to be almost like, in your opinion, 15% of their total business. So tell us how you think Apple's going to make money with this particular venture, and what's the outlook of these plans and the impact overall on Apple's bottom line?
Sure, in the near term, it's good money after bad. I mean, it definitely takes a hit to the bottom line. But what they're trying to do here is they see the writing on the wall. You're definitely seeing a slowdown in smartphone, even ahead of iPhone 7. Now they need to look the next 2-3 years to build out these other growth areas that could start to be double-digit as a percent. Then you'll start to see the margins increase as we get into 2016, 2017, 2018. And that's part of the grand vision here. It's to have an Apple in 3 to 5 years that's not just relying on the iPhone, but is now starting to break out some of these growth areas. And that really is pay, that's streaming, that's automotive, that's augmented reality. And that's what they're doing here. And I think it really speaks to the vision of Cook, trying to make sure he's looked at Nokia, BlackBerry, a lot of these other graveyard companies, realizes needs to build some of these areas and can't just sit on their perch.
All right, so we've taken this Apple side of things for a bit. Let's take a look at the banks side and their perspective. What actual incentive do banks in the U.S. have here to strike a deal with Apple? Now, this report here says that Apple won't be charging participating banks. What exactly is the banking side of this equation in this whole Apple scheme or possible scheme here?
Yeah, from the bank's perspective, you got 1 billion iOS devices sold to date. They definitely want to partner with Apple, and they're enticing it at this point. And from a bank's perspective, it's another potential growth area that they could go down for that incremental consumer that maybe would buy something later or buy something through another avenue. This would be a direct model where the banks could play into, and it's one where it gives them just another mind share, another market share for banks to compete for that consumer dollar.
All right, so it's about bank ecosystems as well as Apple's overall ecosystem. Dan, thank you so much for bringing us that perspective.
Thanks for being here.
Thank you very much. That's Dan Ives over at FBR, and thanks for watching. I'm Dominic Chu. Have a great day.
Hey YouTube fans, I'm Landon Downey from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here, and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.